Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 13th, 2020. And I'm recording this on Sunday, Easter Sunday, the 12th. And if you celebrate Easter, I hope you had a great day with to the best you can with the guidelines with friends and family. But let's take a look at what we can expect in the markets this week. So I'm showing a 60-minute chart for the S&P 500. Last week on Sunday, I said, hey, it looked like we had overnight futures on Sunday evening, a bit of a jump and some optimism. I showed this purple line. This down here was Friday's close. This purple line implied the Monday open. You can see it did open Monday. I said if it got above this previous high, we were probably going to push on to some new highs, and it did, and we did, and we had a pretty strong up week last week. This move takes us to a 50% retracement. If you look at the big move down starting in late February, a very dramatic move down. These are Fibonacci retracement lines. Here's the 50% mark, and we're right at that 50% mark, and you can see we're losing some momentum. A momentum indicator here, the price oscillator starting to roll over, and even this move up wasn't as dramatic as this move up. You can see the peak here is lower than here. And typically I've talked about before that big corrections have an ABC component. So this would be an A, a B, and then we would look at a C movement going below this low here. Now for this week's overnight open, we're about an hour 45 minutes into it, and you can see we're down on the S&P 500 futures about 34 points. That's 1.25%. So this week it's implying a down open to the market, at least so far based on the futures. And I think that makes sense. Even though, last week we had some optimism, it's kind of like, what's the best news you can find in the midst of the coronavirus? And there was some optimism that death rates around the world were starting to peak and even roll over. And the leading indicator of death rates, it's even strange to be talking about such a thing, but the leading indicator of death rates is of course the infection rates. And I get so frustrated when I hear a news article and they're talking about particular data points in the US or various places around the world, and they say this data point has this meaning, and they just don't show any context or chart. If I'm not talking about numbers and the number sequence, I want a chart, just like I would with stocks. So let's look at a chart. So here's a chart of daily new cases of the coronavirus worldwide. And you can see that, from this all-time peak back in early April, it does look, we had a little roll and a push and didn't make new highs. And then, just like with chart, this looks like a trend change. This looks like that curve bend that everybody has been hoping for, and, all the distancing policies were intended to create. So that's good news. That looks like this thing has peaked and is getting ready to head down. Really good news. As long as we can keep it moving that direction, that'd be really, really good. So what does that mean for the market? Well, it'll all be about breaking news. If that continues down, it's good news. If the death rates, very strange to talk about, but if the death rates continue to decline, that'll be a really, really good thing. We're already seeing some field hospitals get shut down and kind of a pullback from the response, but being ready for a second wave that we hope doesn't happen. So we'll just have to let that play out, and hopefully, eventually there's an antibody or a cure, a vaccine developed, and the thing will subside and we can get back to normal. And that kind of takes us to what I think the market's really going to be looking for is, how do we get the economy back moving, and what is the extent of the economic damage? So last week was a bit of optimism, and the market moved up. We look like we're losing momentum. We got an overnight futures down move. The really telling thing, I think, is going to be earnings. That's going to be the leading indicator of economic impact. The unemployment claims has just been off the chart, right? Just historic, from 200 to 250,000 claims per week, kind of running average. All of a sudden, man, 4 million, 6 million, 6 million. And we're probably going to get more. The stimulus checks apparently have already arrived for some people, and the wave of stimulus checks, for unemployment and all those things are on their way. The PPP, payroll protection program loans to small businesses look like starting to break up, and maybe some money start to move. So that would all be good. It would all help the economy, but it's certainly not going to fix everything. We do have earnings coming up, and I think this is really what people are going to be looking for. As companies talk about their Q1 earnings, and I don't think the market will care a whit about what their Q1 numbers were, because Q1 was pretty well baked before all the real shutdowns rolled in and really took effect toward the end of March. So Q1 was pretty much over for most people in March. And so now the real thing is going to be in the conference calls and the forward-looking statements. And, companies have already said we just don't have any data to base it on. Right? We are in uncharted territory. But I think the tone of those meetings, there are going to be some companies that are well-positioned, and there's going to be some companies that are just absolutely devastated. And so, the body language, the tone of those meetings, and their best attempt at forward-looking statements for earnings are going to have a big impact on the market. And it seems just from a technical basis, we are kind of poised to move on back down. That's my expectation. My forecast is that the market is going to head down. Could take a week or two to begin to gather some momentum. There will be short-term news and volatility, but I do expect us to see, like I said, that sea leg form eventually, over the next few weeks, and likely take the market down past March lows. But earnings coming up, it really kicks off Tuesday, and you can see we got some big companies, financials, JP Morgan, Wells Fargo, we got Johnson & Johnson, we got Fastenal, and JB Hunt, which is a transportation bellwether. So that's Tuesday. There's not much going on Monday, but on Tuesday, it really starts to roll out. Here's Wednesday. Bank of America, United Health, Citigroup, Goldman, U.S. Bancorp. These are big deals, Bed Bath & Beyond. And so it'll be interesting to see, and I think important for the market as some of these big dogs. Abbott Laboratories, Schwab, Bank of New York Mellon. I'm just showing the calendar here for earnings coming up. So I think that's going to help set the tone. And we will trade the realities, and I'm prepared, got cash on the sideline, I'm ready. If we do get this B leg heading down with some momentum, there's going to be some tremendous profit to be made in shorts, and there will be some companies that are well positioned, if they're providing personal protective gear, providing services, somehow benefiting, in a constructive way. From the current situation, they will do well, and also we are very interested in gold. We're long gold. We're in profit on gold, and a few other companies. So there will be opportunities. Day trading. This is kind of the ideal scenario, short term, for day traders. But we think there's some longer term, couple day to a week or two kind of plays for swing traders, which is what we primarily do. So watch for this to roll over. And on a 60-minute chart, we're looking for a low, lower high, new low, and we'll try to trade that. So that's my best take. Don't have a crystal ball, not a prophet. Just read the charts and pay attention to historical cycles. And again, I think the data so far is that we're getting ready to roll over and head down, and we will be positioned to profit from that. All right, take care. And as always, send me your questions, your comments, your feedback.